So whenever there is an exhaustion in a trend, as in when the trend wants to reverse, or maybe the trend wants to make a retracement, or then maybe the trend has to start the beginning of a reversal, there is a candlestick pattern that is often common within the price action of that trend, and that candlestick pattern is what we call the exhaustion candlestick pattern. Now, the exhaustion candlestick pattern, by configuration, it is the biggest amongst the line of candlestick within a trend. In other words, if you have smaller candlestick, the biggest candlestick here and here becomes the exhaustion candlestick. Now, what is the psychology behind this exhaustion candlestick and why is it formed? Now, the exhaustion candlestick, like most people would feel, looking at the price action alone, it calls for what? A reversal. Now, if you look at the price action alone, you might be tempted to think that this is a pattern that signifies a continuation in trend. But in this video now, I'm going to tell you the psychology behind the exhaustion candlestick, why a huge candle like this in a trend would become a reversal pattern, and how you can take advantage of it both in an overbought or oversold area, a strong uptrend or a strong downtrend, and a weak uptrend and a weak downtrend as well. So stay tuned and I'm going to show you everything you need to know about the exhaustion candle in this video. Now, the exhaustion candlestick has the psychology behind it. And what is that psychology? For instance, in a trend that is weak and the trend is supposed to face a reversal, you find out that the candlestick begins to become smaller and smaller. Now, this small candlestick shows one thing that is very common. It shows a loss in momentum. But then we begin to see this huge candlestick showing up even after this loss in momentum. This is now the exhaustion candlestick. What's happening here is very simple. Buyers, for instance, in an overbought area where the price should reverse, as you can see with the arrow here, buyers are now beginning to get weak because they are taking their profit, so less buyers are entering. But because this is a trend, most people sitting at the sideline who have not yet taken advantage of this trend will always want to enter to take advantage of it. Now, the insiders, they are waiting for such people. When they see such people entering into the trade, they will quickly take the other side of the trade, which is the downward side of the trade, in case of an overbought. Now, the exhaustion candlestick now shows the point at which a large group of uninformed traders entered into the market at once and take the price up until this height, making it bigger than the previous candlestick. But this is all they can do. They can only take the price up to this extent. They cannot take the trend above this extent. So when they take the price up to this extent, it is mostly going to stop in a key level. Now, when it stops in a key level, this becomes the ideal configuration for an exhaustion candle. It shows that the trend has been exhausted, and this is the last attempt by the buyers who are not informed about the exhaustion of the trend. They might think that this is a continuation. They might think that this trend is a strong trend because they have not taken into recognition the loss in momentum. So now when they see something like this, they jump in. You see that the insiders quickly take the opposite side of the trade and make them losing traders. So for you to get this candlestick at the overbought area, it is an opportunity not to buy, no, but it is an opportunity to sell. And how do you sell? Like I've always told you, try to get your trade above the closing price of this candlestick. When the candlestick goes up, you do a put trade here in case it closes as a doji or a weak green candlestick, because this is where the loss of momentum happens. And mind you, there is also something like a key level. Yes, there should be a key level here at this part of the market. There should be a key level somewhere around here where you can take the trade from. Now, the next is in an overbought area. Like you see, I did a red arrow here to signify that it's going downward, but in a strong uptrend, this candlestick is supposed to mean a reversal. But when the trend is so strong, it will most likely go down a bit and then go up. this is why I did something like this. So why is it happening like this? If you understand me clearly, I always talk about failure. In a strong uptrend, you don't expect, even if you see the trend showing loss in momentum, you don't really expect the market to reverse like that. No, because the trend is so strong, the market will have to take time before the momentum dies out. Now, is in the same scenario, we are seeing loss in momentum, and then we got the exhaustion candlestick pattern. In a strong uptrend, you don't go with the put. All you have to do is to wait for this candlestick that is supposed to be the put trade. All you have to do is to wait for it to fail. When it fails to change to a red candle, let's say we have a level here, and you wait for it to go down, it comes down like this, and then it closes as a green candle. This is the failure in action. When you get that, you do your call trade to continue the strong uptrend, even if this is an exhaustion candle. So this exhaustion candle here will signify a reversal, but this exhaustion candle is like a pause. Like when you're driving your car and you have to change your brake, this is what the exhaustion candle is. You have to just slow down a bit, change your brake, and continue with the uptrend. Now, in a weak uptrend, how do we trade the exhaustion candlestick? It's almost like in an overbought area. In a weak uptrend, you know that the market is weak, the price has been losing momentum. When you get the exhaustion candlestick, like I said, exhaustion candlestick is not a continuation pattern. It is a sign of reversal. It is the last attempt by the buyers or by the ruling market participant to take the market up. But this candlestick is going to stop at a key level, and when it stops there in a weak uptrend, you do your trade above the closing price of the exhaustion candlestick pattern. This is how we trade the exhaustion candlestick pattern in an uptrend. For the first one, we have the overbought. The second one, we have the strong uptrend, and for the last, we have a weak uptrend. Now, for a downtrend, it is the same thing. The downtrend in an oversold area. I told you, for like my mentorship students, you know what an overbought and oversold area is. Even in live trading videos, even though you are not my student, I must have explained what an overbought and an oversold area is. So in an oversold area, you can see the biggest candlestick. You see the biggest candlestick within this trend stopping at a key level becomes the exhaustion candle. And what do? You do a call trade. At a strong downtrend, the reverse is the case. In a strong downtrend, you don't expect to go against the trend, even though the pattern is there, the pattern is clear, you know the pattern is there, but you are not expected to go against that strong trend. All you have to do when there is a key level here, all you have to do is to wait. When you wait for this candlestick to go up, it may fail and then it comes back down. You have to continue with this trend, not against the trend. And now in a weak downtrend, you do the same thing at this point. This is not an overbought. This may be a ranging market, most especially. Yes, it is mostly a ranging market. The price is moving within an established support and resistance. This kind of situation, it's a weak downtrend. You see the loss in momentum, and you see this strong red candlestick that you might think is a continuation, but this is just an exhaustion candlestick pattern. Now this is also in a trending market, but now the price has gone out of the 2 deviation Bollinger Band here and here. This is a strong downtrend whereby the price is within the 1 deviation and 2 deviation upper, 1 deviation and 2 deviation lower, with all the EMAs aligned, and this is a weak downtrend and uptrend, which may be in the ranging market. You know, for key levels, we have the EMAs, we have the Bollinger Band, we have the round number, we have Fibonacci level, we have fair value gap, we have order block. We have so many key levels depending on what you may choose to be your key level. So with when you get these things in place, you can now start taking advantage of the fair value gap. So I hope you guys have understand how you can trade these candlestick patterns. Most of you have seen this pattern in the past before at this point, and you continue with an uptrend only for the price to return back. So now you can understand why this pattern is not a reversal pattern. Now it does not mean it has to be like this. There might be a little wick above or there might be the same wick upper and lower size. You see that the size of the wick upper and lower are the same size. This is what makes it even a better reversal pattern, because in that case it is a wick candlestick pattern. And then the second candlestick, which is this candlestick, oftentimes the second candlestick is smaller than the previous candlesticks. How do I mean? Like this candlestick here might be okay, can't do that, you know. Okay, you see this candlestick might be smaller than these ones. You see what I'm saying? It might be like this. So you see the second candlestick before the exhaustion candlestick might be the smallest candlestick within the trend, and then the exhaustion candlestick itself becomes the biggest candlestick within that same trend, and this is what really makes it an exhaustion candlestick. Now, you know, this is just for illustration. In real life situation, it's not going to be exactly like this, because we might be seeing some kind of wicks that shows buyer and sellers pressure. So let me put something like that there so that you can understand more what I'm talking about. For instance, you might have something like this, the wicks that are showing both buyers and sellers coming into the market. For instance, you might have something like this. Okay, you see, you might have something like this as a wick that shows both buyers and sellers pressure, but now you can see that the candlestick pattern is still the same. You can see the candlestick. You have upper wicks here like this that shows both buying, like here showing selling pressure, yes, showing selling pressure. This is selling pressure. Why is it selling pressure? Because it is in an overbought area. Sellers took the price up and bring it, and buyers took it up. Sellers took the price down, buyers took it up. But you see the buyers, they are still weak. So this now is selling pressure. But if this kind of candlestick is happening where at a strong trend like this wick here is what? Buying pressure, not selling pressure. This wick now becomes buying pressure. If it's happening in a weak uptrend like this wick here becomes what? Selling pressure. And this candlestick have a different name. This is a hanging man, this is a hanging man, but this is a hammer candlestick. Why is it a hanging man and a hammer candlestick? Only because of the pressure, because this is a strong uptrend, this is an overbought, and this is a weak uptrend. This becomes a different candlestick pattern from this candlestick and this candlestick. I'll be talking about pressure fully on our subsequent videos, but not this one. So let me leave it for now. This candlestick here too, likewise the same thing. If you have a candlestick like this here, this becomes a hammer candlestick, and this wick here begins to show selling pressure. Even if this wick is up like this is also showing, this wick is showing buying pressure, whether up or down. You can even have double wicks like this, that is like a long leg doji. This is also showing buying pressure. This is showing buying pressure. This now, if you have a wick like this within this candlestick in a strong downtrend, this is not going to show buying pressure. It's going to show selling pressure. Why? Because this is happening in a strong downtrend. And in the last case where we have a candlestick like this in a weak downtrend, this is showing what? Buying pressure, not selling pressure. Why? Simply because we are in a weak downtrend. It is as simple as this. You understand the pressure of each candlestick pattern based on the sentiment of the market, and that sentiment is about the strong trend or the weak trend, where the pressure is coming from, where the pressure is going against. In subsequent video, I'll be explaining all of these to you guys so that you can understand what we are doing, and from here we can build on to other advanced candlestick patterns and technical analysis patterns. If this is your first time, please do well to like, share, and subscribe to my channel. I want to thank each and every one of you who has done that and has brought the channel this far, over 500 subscribers now. I say a very big thank you to you all. If you have not, please do well to get the ebook. It's very important if you want to take your trading to the next level. If you are serious about your trading for next year, you should get the ebook. And talking about next year, the Telegram signal group is on already, and there are traders who are already making profit. For those of you who may think you don't have money, I think this is an opportunity for you to get into that signal group. It is 100% free. Now, it will not be free forever, because I'm not going to sit here and give you free signals forever. So this is an opportunity that you should use. I don't know, maybe it's still there are other factors that are making you not joining that Telegram signal group. I really don't know, but for your own good, I believe that you should join that signal group, so that at least there will be some financial pressure off your back while you learn how to trade. In this case, you will be earning money and also learning how to trade. So this will be all for today. In our next video, I'll continue giving you more price action tips, more price action strategies that you can use at different market conditions. So like I said, like, share and subscribe to this channel. Until our next video, take care, happy new year in advance, and bye bye.